Hey everybody, what's going on? It's James here with Crypto Common Sense. Wanted to sit down this morning and shoot a quick Bitcoin/cryptocurrency market update video for you. It is April the 24th, about 4:45 Central Time. So a lot has happened the last couple of days and we're going to go over all of that. Before I jump into the content, please do me a huge favor, hit that thumbs up button. Make sure you subscribe to the channel if you have not already. And don't forget to check the description for links where you can join my Patreon for just $7 a month. All right, so first things first, I don't think it's time to panic on Bitcoin, right? Everything that's happening right now is stuff that we could have predicted, stuff that we could have seen coming, at least with some degree of certainty. I had posted up a wick-off distribution chart last week, said that I thought this was a UTAD. And of course, after UTAD, you get your lower low, you get your low, your lower high, your lower low, your lower high, and then you get your breakdown, your retest of supply, and then further breakdown, right? If you don't know what wick-off looks like, you can go Google it. I don't have it pulled up, but essentially what happens after you break down here, right? You consolidate a bit, and if this continues to play out like wick-off distribution, then we're going to move down even further. My guess is if this thing moves down further, the first place that it's going to look to find support is down around 40 to 42K. Now, there's a few different reasons for that. The most obvious one, let's turn volume off. We need volume, but right now it's in the way. Turn the moving averages off, they're in the way too, right? So we have a 61.8 Fibonacci level down there, and a lot of people don't remember this. A lot of people have come into crypto after 2019, after 2020, and they don't realize that in previous bull markets in Bitcoin, the corrections almost always retrace to the 61.8. We've been getting these dinky little 10, 15, 20% pullbacks. People have gotten used to that, and they haven't seen a single correction of the 61.8 this entire time. Well, now all of a sudden, what we're seeing is a potential to go back down to the 61.8 of this local move. It's still not the full 61.8, but the reason that makes sense to me is because look where it's at, 42.5. Look where our old area of resistance that we broke out of was. Right around 40, right at 42K, right, 41,986. So that's kind of what I'm thinking is if this is a correction, okay, this is what I'm thinking. Some consolidation here and then a breakdown to this level, right? That's probably be easier if I just go ahead and pull up the chart, right? So this is what I posted last week. We broke down that first move down toward, 48K-ish. I think maybe it was even 50K. Then we had our little dead cat bounced up to around 55, 56K. Where'd we go to? We went to right around 57K, which, by the way, was the bottom of this box. This used to be supply, right? Broke through it, became demand, and then we broke underneath it, so it flips back to supply or flips back to resistance. Just like right here, last point of supply. That's what LPSY stands for. Another move down, basically consolidate around the SAL. And this is where things are going to get a bit sketchy, right? Our SAL is back here around 42K, 44K in that ballpark. Here's where things are going to be, really tricky because a lot of people are going to expect this to just bounce and then continue its uptrend. And it might, right? I'm going to cover that in a second. But if this is truly distribution, what happens is you consolidate there. You have retail loading up on longs, but you still have institutional investors actually exiting their moves, and then you get your actual markdown. This isn't the markdown just yet. This last part's where you really get your sell-off, and that, folks, could take us way the hell back down here to around 20K, maybe even lower, right? If this market is over, that's what we're going to see. We'll see a move back down toward that 12 to 20K range, which would finally satisfy that, I don't know that you would call it a need, but would satisfy that 61.8 of the entire move down, right? And basically what I'm saying is, if that's what happens, it could be that this cycle's over, right? And that we're entering into a bear market. We probably head back down to around, the 80% or more, and down around 12K is where that major support is at. Again, we want to wait for the market to tell us that this is what's happening. I'm not saying it is yet. I don't have enough information. I'm saying this is what could potentially be going on, so you need to be careful. But if you look at the top up around 65K and you pull down 84%, which is about the norm for a Bitcoin bear market, that takes it down around 9,900 bucks, takes it down to this major level of support. So this all makes sense. It also makes sense when you look at previous market cycles. Each one's about 18 to 20% of the previous cycle return, which would have put us up around 70 to 72K. We got to 65K, right? So it could be that the market top is in. We of course already saw that the pi cycle indicator did indeed come in. I was very skeptical of it. I thought it can't be that simple. But then it lined up really nicely with the Coinbase listing, which if you remember in 2017, people said, well, the market can't go down like it did last time, because last time that only happened because of Mt. Gox. Well, then what happened was the CME listing went live and it immediately started selling off. It was just a buy the rumor, sell the news, big event. Well, the Coinbase listing very well could be the same thing, right? So you have to be very, very careful of that. I'm not suggesting you go out there and sell anything. That's up to you. I'm just simply saying you might want to be cautious about how you play this market. So again, pi cycle indicator is saying the top of the cycle is in, that this is not a local top, this is the cycle top. All right, if we go back over to the 4-hour chart, one thing that I did notice, let's get some of these lines off here, get the fibs out of the way. One thing that I noticed was we did have a true death cross, right? Death cross, true death cross happens when the 50 moving average crosses the 200 moving average and they're both sloping down. We did have that right here. We have not had that in quite some time. So there's a lot of things in this chart that are very concerning. One of the other things that concerns me is when you look at a market cycle chart, you have thrill and then you have euphoria. And after euphoria on a market cycle chart, what comes next is complacency. And basically what complacency is we just need to cool off for the next rally. Well, that's kind of what everybody is saying right now. I went to social media. I didn't interact with anybody on there. I don't care to. But I went to social media just kind of see what other people were saying, kind of read the room, if you will. And there's a lot of people saying, you should be buying this dip, buy the dip, buy the dip. What are you doing? This isn't a bear market, buy the dip. Okay, well, that was really bad advice because they were saying it back here and it just went lower, right? And they're still saying it. This is the problem with social media gurus, is they act like they have an endless supply of money. Now that comes down to two things, I believe. One is I don't believe they're actually taking the trades they're talking about. And number two, when they are taking the trades, I think they're taking very, 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 very small trades, maybe putting in $500. So if they're wrong, they can put in another 500, another 500, another 500. But if you're going out there putting in a bunch of money back here at 55K, and now suddenly you're down another 10%, and you put in a bunch of money here and it drops again, eventually you will run out of money, right? That's just common sense. But that seems to be lacking in most markets. So I would just say be very, very careful. There is a huge difference, guys, and this is what they're comparing it to. Let me get a nice clean chart up of a daily. They are saying, oh, let me just delete everything. It's dirty. Okay. They're saying buy the dip, and they're saying every time Bitcoin pulls back 30%, it's a good buying opportunity. But here's the problem. Bitcoin does traditionally correct 30 to 40%, right? That's totally normal. I 100% agree with that. But normally when it retraces 30 to 40%, what we've seen it putting in higher lows, right? At least on a weekly level, which we'll look at in a second. We've also seen it finding areas of support. So back here, it bounced off the 50. Over here it bounced off the 50. But here it lost the 50. That's a very important line in the sand. And that's concerning. That right there is enough to make me pause and not want to automatically buy the dip, right? I'm not saying automatically short it. There was a place to short it, but I'm saying, just be careful because this time is not like these previous dips. The other thing that you really need to pay attention to is we haven't yet tested this 19-week moving average, right? Now this could end up being a very strong line of support. It would make sense to me if it did. It's also this low back here, so that could be what's happening. Just test that and then continue the up move, right? That's some bullish news. The not so bullish news is if you look at 2017, which is the cycle that everybody's trying to compare this move to, like this year, right? Supposedly 2021 is the 2017. Well, at no point in time in 2017, it starts right here, did we ever put in a lower weekly low, right? Here's our low right here. It moved up, it corrected hard, back down to the 19-week moving average, but did not take out this low. It moved up off of that, corrected hard, 30 to 40%, also the 61.8, hit the 19-week moving average, but did not take out the previous low. It moved up all the way to $5,000. It corrected hard, fell down to around $3,000, retested this old high, retested the 19-week moving average, but did not take this low. See, this right here, this is what I was hoping the market would play out like over the last couple of years. When I was trading in 2018 and the bear market, tore me up, I thought it's all good. I've learned my lessons. I learned so much. And when the next bull run hits, I'll be watching for that 19-week moving average. I'll be watching to retest those old highs. I'll be watching for that 61.8, and I'm going to get absolutely filthy freaking rich. See how perfect this was? Perfect move back down to the old high. Perfect move back down to the 19-week moving average. Perfect move to the 61.8. We didn't get a single trade like that in the last 2 years. Not one friggin' trade was that perfect because of all the heavy-handed manipulation going on in the market, right? We won't say who, we don't know who. All we know is the market was heavily manipulated and it didn't play out like all the previous bull cycles, all right? So this is the major problem. Look here, you come back down, we didn't hit the 19 that time. We front ran the old high, but we obviously didn't take out that low. The first time we took out a previous weekly low was right here. Here's your low, lower high, lower low. And what happened? That was the start of the bear market. Boom, down she went. You look at 2019. High, low, high, low, high, low, high, lower low, lower high, lower low. And what happened? Down she went. Now, we have not had a lower low yet, but here's the problem. This is technically our last low. Here's our high, here's our low, higher high, higher low, higher high. See the problem? Unless this pulls back above that 55.7K, this will indeed be a lower low. Now, it's up for debate. So before I get super duper bearish and think the bear market started, what I really want to see is and I don't want this, let's be clear, I don't want a bear market to start. I want the bull market to continue another 6 months. But if, it's a bear market, I would like to see this take out this low, close a weekly candle below it, close a weekly candle below this 19-week moving average, and then that's going to be enough confirmation to me, not necessarily to sell everything off, right? But at least to start playing it, looking more for the shorts instead of looking for longs, right? Taking short plays instead of long plays. If we go back, again, 19-week moving average, super important. We stayed above it all of 2017, when we initially broke underneath it. We got the bearish retest in 2018, and that was that, right? Same thing, we stayed above it in 2019, but when we got the first bearish retest, which was that crazy Z pump, right, in October of 2019, and then boom, down we went, right? Broke back above it here, and then of course, the sell-off happened, fell underneath it, huge sell-off. So if we close underneath that 19-week moving average, I fully expect a huge sell-off to ensue, right? So as far as buying the dip goes, that's completely up to you, but just be aware that a dip when you're making higher lows is a dip. A dip when you're making lower lows is actually a falling knife, right? So be aware of that. So that's the 19-week moving average I think you should watch for. What else is there that we might want to talk about? Obviously, don't forget that our volume profile, it still looks very sketchy. Our point of control is down here, way down here, around 7,400, depending on how you look at it. You look at this bull cycle starting in 2018, or 2019, excuse me. Our point of control is down around 9,750. Nobody expects us to go back to 10K, right? I mean, I say nobody, but obviously I do. And a few other people do as well. But for the most part, nobody thinks it's going to go there. But remember, parabolas, when they break, retrace by textbook about 80%. Bear markets and Bitcoin take it down about 84% to 90% on average. And if you pull this down 84%, look how perfect that is. Right around 10K, which is right around our point of control is, right where the support is down here. So again, I'm not saying it's a bear market yet. I just told you what I'm looking for to make me feel like it's a bear market, right? As far as the 3-day goes, we had our 3 little pigs set up. I talked about this in my previous video, I believe. It played out beautifully. We had our up channel. I had told my Discord and I think social media as well. I'm not sure about social media, but I said once it broke this channel, that's where I would start, looking for shorts. And of course, it did break that channel, and of course, it has broke down considerably. It's down about 10K since then. So we had, and again, 3 little pigs is just what I call this setup. It's something that I nicknamed it so I could teach it to students. But in reality, all this is a triple divergence, right? You have your higher high, lower high, higher high, lower high. So there's double divergence. Higher high, lower high, it's triple divergence. Boom. We are back inside this purple bear market box, which of course I said we don't really want to be in, right? In a bull market, it does dip down there sometimes. You can see, for example, in 2017, it dipped down there. It was just corrections that came right back out of it, so that would be important. It's a little bit lower than what I'd like to see. It's down around 47 right now. Really want to see it stay above 50. But remember back in September, it also dipped down there in this little correction here. And again, it was a baby correction, only about 20%, and then up she went. So that's something that I want to pay attention to, is that box on the 3-day. I know I'm jumping all over, but there's just so much information to cover, and I'm trying to do it in a quick and timely manner here. What else is there? As far as moves go, remember that no market moves in a straight line, so this does indeed end up being a bear market. You don't want to short dips in most markets. You want to short bounces. And even a bear market, obviously, you don't want to sell the dips. You want to, sell the bounce or hold the bounces and buy the dips. So just, keep in mind, this is potentially a wonky double top here. Okay, this will make more sense on a line chart probably. You see it now. You see the double top. Boom, 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 boom. It did break the neckline, guys. Okay, so there is a wonky double top sitting there, and it hasn't closed yet. But this candle is going to close in less than 2 days. Right, this candle is going to close tomorrow, and we'll have a confirmed double top. And if you look at 2019, we had the same wonky double top. Boom, 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 boom. Down she went. Right, and in 2017, we had a very weak, I wouldn't even necessarily call it a double top. Some people might. Boom, 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 boom. Right. So I do think the market is throwing up a lot of red flags. Now, let's look at the bullish side of things, and this is what's very confusing to me. Okay. If we go look at altcoins, most altcoins actually look really good versus Bitcoin. I'm not going to say all altcoins, because obviously I haven't looked at every single altcoin. But if you go pull up altcoin charts versus Bitcoin, what we see a lot of is bear cycles, and then we see a lot of accumulation patterns where it's just grinding sideways, accumulating. And then we see things like this where, okay, here's your lower high, higher low, higher high, higher low, boom, lift off, right? Obviously, this did run into resistance up here, but we are seeing a lot of that. That's DigiByte. If you look at, just any random coin, right? These are the coins that I hold. I'm not telling you to hold these. Most of these I hold very, very small positions in. They're leftover positions from 2017. They're free. And what I mean by that is I bought them. I more than doubled my money. I cashed out my initial, and then I took profits as they went up, and I was left, like in some cases, less than $100 worth of these, right? In other cases, I've got a lot more. But look at, for example, Zcash, right? Zcash was just grinding sideways. It collapsed, but now it's putting in these higher lows and higher highs. You look at things like Verge. Verge, all of a sudden, here's your W on your bottom, here's your retest, here's your liftoff, right? A lot of these things are looking good, and that's really bad or really good for me, depending on how you look at it, because if I was mainly in Bitcoin right now, I would feel completely safe to move to US dollars and simply wait and let the market tell me what's coming. But because I'm very alt heavy, right? About 70% of my portfolio is altcoins. It's very tricky for me because I don't want to just cash them out, because then I get nailed with the capital gains taxes, right? I came very, very close to cashing them out 3 days ago. I was sitting with my wife and I said, I think this thing's getting ready to have a correction at the very least. But I thought, damn, I just don't want to pay the capital gains on them, right? I just don't want to do it. Because then if you're wrong and it keeps going up and you buy them back, fine, but now you've got that tax bill on top of it. So it's really, really a headache. And it's really hard to, move from an altcoin back over to Bitcoin when you're seeing so many of these breaking out. Like this is, Tron, which I'm not a big fan of, but I have a bunch of free Tron left over. You had the double bottom down here. You had the break. It broke right through this zone of supply. Now it's basically sitting near the top of it, so it's looking like it's flipped to demand, right? Or you look at a coin like, what's a total shit coin? Deep Blockchain. This is the shit coin that one of those high dollar newsletters recommended back in early 2018. Literally had people like me. I bought the top. I put $2,000 in this thing, which I don't know how much Bitcoin that was. It was probably about 0.1 Bitcoin that I put into it back then, right? Bought it somewhere around here, and now I'm down like 99%. Those newsletters are jokes, right? But even it's got this huge pump here. I don't know how much it pumped, a few 100% at least. More like 3,000%, right? And that's obviously taking out all these previous highs back here. It looks like it wants to, obviously it looks like it needs to retrace, but then it looks like it might be breaking out. And when you think about the market psychology chart, what you get after the quote-unquote depression phase is you get the breakout, which is the quote-unquote suckers rally. Then it starts to retrace. and people think, oh, this rally is going to fail like all the others. They sell it or they short it or whatever, and then that coin starts its new cycle. So most of these altcoins seem to be in that disbelief phase, which is so weird, versus Bitcoin, not versus US dollars. That's totally different. So for me, guys, I don't know what to do. I'm being totally transparent here and putting myself out there. I have no freaking idea. I'm stumped, right? It looks bearish to me. It looks like a bear market might be around the corner, which I just don't see hardly any scenario where Bitcoin goes down and alts go up. That's just a weird scenario that doesn't normally happen. The only thing I can think might happen, and this is a huge, huge, huge might, is in the previous bear market, Bitcoin topped around 2017 in December, and then a lot of altcoins had really good first quarter 2018s, which is why I got trapped, right? Because what happened was Bitcoin was going down, and back then I thought, well, shit, I should sell everything. But then the altcoins started going nuts, and I thought, oh, okay, well, I guess it's not a bear market after all. So I held the Bitcoin as it went down, bought more of it as it went down, and then my alts were still going up, and then all of a sudden you come April, May, the alts just collapsed. A lot of them fell 60, 70, 80%, and then Bitcoin was already way down, and then it was like, shit, now I'm down on everything, right? And then it was too late, or I felt like it was too late. At the time, I think Bitcoin had fallen to around $6,000 or $7,000. It was like the summer 2018. And I remember making a post in my Facebook group saying, I don't know who's selling here. This is crazy to me. Who's selling Bitcoin at $6,000, right? But the people who were selling there were very smart because Bitcoin fell to $3,000 and they got to, double their Bitcoin, if you will. But I don't know. I don't know if the alts, or this is just one big bull trap where everybody's going to get stuck holding these alts forever or what. And, a friend of mine recently started buying cryptocurrency. He'd never been involved in it before. He bought one Bitcoin with his money in March of 2020. And so, of course, he's done very well on that one Bitcoin. And like he was saying, he's starting to get into some of these alts. He's like, I don't care if they go down. I'll just hold them forever. Eventually they'll go up. Guys, I don't know how new you are, but please don't think that's the way this works. Bitcoin has historically always went back up, and it's possible that it might always go up, right? The stock market has always went up, but not individual stocks, right? The stock market as a whole has went up. And these altcoins, most of these altcoins will end up going to zero, right? Or close to zero. Most of them will completely die off. And you don't know which ones it's going to be. So buying an altcoin without a stop loss, and this is something that I did a lot of in 2018. I never should have done it. It was stupid. Buying altcoins without stop losses and telling yourself they're investments, not a great idea, right? Not a great idea. That's how I turned 12 Bitcoin, right, into less than 2 Bitcoin. And it's less than 2 Bitcoin now, a little less than 2 Bitcoin, because these alts have pumped so much. But, a few months ago, it was like right at 1 Bitcoin worth of altcoins that I paid 12, I think it might have been 10. It's between 10 and 12 Bitcoin that I paid for these altcoins, right? I was just giving my Bitcoin away without stop losses because I just thought, well, they can't go down forever. They got to eventually go back up. Very, very newbie thinking that cost me literally $500,000. So this idea that altcoins will all go back up, I think it's naive, right? You just don't know. You don't know. But yeah, overall, this thing looks pretty doggish. We're about to have a death cross on the 6 hour as well. Like I said, we broke out of this channel. This was such a beautiful channel, and we broke out of it. Had the retest of supply, and we just keep moving down. So as far as buying dips go, just know what you're getting into, because if this thing goes all the way down to 42K, it's going to take out this whole consolidation zone up here. Which, guess what? If you got a whole zone of consolidation up here and you take the whole thing out and go all the way down here, this suddenly flips to supply. Now you've got this whole zone that you've got to work your way back through to continue going up, and it's a lot easier for it to go down, right? Where there's not as much, demand, if you will. And listen, it's not biased saying that. That's just the way it works, guys. It's the same thing that happened back here, right? Bitcoin ran up here, it consolidated for a few months all through this area, and then when it broke south of it, look, it tried to come back up, it tried to restart, but it just couldn't get through all of this, failed miserably right here, and then kept going down, right? So sorry to be the bearer of bad news, no pun intended, but I think that we might be in trouble here. Okay. So obviously the video is pretty long. I try to be thorough and try to kind of go through everything. And again, I don't know everything, guys. I've been doing this now in a few weeks. It'll make my 4-year anniversary since I started trading. And every few months I learn something new where it's like, oh, that's so awesome. I wish I knew that, a year ago or whatever. So if anything, the last, year or so has been very eye-opening to how these markets can really really do things that you never expect. So, I can expect that the cycle might be over. I'm hoping it's not. Like I said, expect the unexpected, I guess. So, one thing that I would watch for, I forgot to mention this in the video, if this thing does get a bounce, which I'm hoping like hell it does, because I want to sell higher than down here if I do sell. But if the thing does get a bounce, watch the volume very closely. One of the reasons I felt like this was probably distribution is because, it was mainly, the larger bars were mainly red bars, which is selling volume. And the green bars tended to be smaller on average. So if we get a pump and it's real weak volume, that's going to make me lean heavily toward, okay, this is our complacency pump. If we get a pump and there's heavy volume, especially expanding buying volume, I will think that it's probably not a dead cat bounce and that it's probably going to take out this high and continue its uptrend. And for the sake of all of us, let's hope that's what's happening, right? Because we're way past the point of, hey, I want this thing to go down to buy more. At this point, if it goes down, it's probably over and we're probably going to have to go through a whole cycle again. I'd rather not go through another cycle just yet. I'd rather, make more money. The last few months have been especially good. I'd rather make more money, and that way when it finally does go down, I have even more to buy back lower. But reality is reality. It's not going to do what we want. It's going to do what it's going to do. So there you have it. So you know what to watch for, and you play it the way you feel is best. I'll play it the way I feel best, and hopefully we all come out on top. All right. With all that being said, don't forget, I'm literally some guy sitting in a spare bedroom at 5 o'clock in the morning. So nothing in this video is financial advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor, which I'm not, before making any type of investment in cryptocurrency, the stock market, or precious metals. If you enjoyed this video, be sure and give it a thumbs up. Don't forget to subscribe to the channel, and make sure you check that description for a link where you can join Patreon for just $7 a month. That gives you access to more frequent updates. This is James with Crypto Common Sense, reminding you to please trade safe.